With Marketwatch in San Francisco, I'm August Cole. I'm joined today by Michael Roach of airline consultancy Roach and Sbarra in San Francisco. Michael, thanks for joining us.
Happy to be here.
Well, we haven't seen the airline industry make money since about 2000. Is it going to happen anytime soon?
That's a really good question. I made a fool of myself several years ago predicting that the worst was over, and then fuel prices spiked and the horror continued. We're certainly in what should be good times. Traffic is strong, fares are rising, planes are full. They ought to be making money, and they probably would be making money if fuel prices were lower. The problem is there isn't any reason to believe fuel prices are going to go significantly lower, and in long term they'll probably be higher. So it may be that we're not going to see much in the way of profits from the legacy carriers for a long time to come yet.
Is anyone immune to this spike in fuel prices, this latest round?
Well, no one is. The carriers have not been successful, really, in raising fares in response to higher fuel prices, unlike cargo carriers, package carriers, surface carriers. They've been able to pass the fuel prices through, but the airlines have not. The public wants very low fares, and the traffic is there, but only at very low fares.
Can approaching the airline business model from the revenue side, saying if we offer more amenities, a higher class of service, can that solve some of the problem?
Well, United thinks it can, and apparently Delta does. I happen to belong to the other camp, which is sort of the poster child at the moment is American, followed by Northwest, who seem to have accepted the reality as I see it, which is that the low-fare business model wins. People simply want to fly from A to B for as low a price as possible. Sure, give me some amenities, that's fine, I'll take them. But will I pay a lot for them? Absolutely not. And so I think if you stake your business model on achieving a significant premium over JetBlue and Southwest, you're in for a lot of trouble, and that seems to be what United has done.
So how do you rate United's chance of succeeding with its restructuring when it emerges from bankruptcy next month?
Well, for short term, I think they will succeed. But they have lowered their costs, and they've certainly fixed up their balance sheet by wiping out billions of dollars worth of debt and their shareholders. But long term, I don't believe in that business model. I believe the low-cost providers providing low fares are going to win in this industry. I think that's what the public wants.
Now, those low-cost carriers are expanding too, and as they grow, do they potentially run into the same growing pains down the road?
Well, that problem is always there. Any company, as they grow and their workforce ages, their management becomes fat, dumb, and happy, is subject to cost pressures. I'm very concerned long-term about Southwest, which has been the great model for the whole world of a low-cost carrier. Their unit labor costs are beginning to rise quite steeply, really. They're doing a very good job of keeping other costs under control, and of course they've been helped in the last several years by fuel hedging, but the benefits of that are going to disappear in the years ahead. So I'm very concerned that Southwest will eventually be eaten by itself in terms of giving too much to the employees. They're well into their 30s now, and they're large and probably a little too bureaucratic, and so there's a lot of cost pressure there.
So is scale a disadvantage? I think about the potential for consolidation in the industry.
Scale, in my view, is a disadvantage in terms of the provision of airline service itself, beyond a certain minimum size. Obviously, large portions of the airline industry have huge economies of scale, such as maintenance, but Southwest doesn't even perform heavy maintenance. They outsource it. It's not, from their point of view, and mine as well, a core competency of an airline to know how to overhaul a jet engine. Running the airline itself, it appears that beyond a certain size, they become less economical rather than more economical. Whether that's 50 planes, 100 planes, it's hard to say. Southwest is probably beyond that size with 450 planes.
When investors are looking at the industry, and I mean institutional investors, funds, there still is quite an appetite for airlines right now. Is that something that is dependent on this current crop of low-cost carriers and upstarts, not just in the U.S. but around the world?
Well, there's been a lot of excitement in recent years about upstarts, if you will, or what I prefer to call new generation airlines all over the world. AirAsia, Virgin Blue in Australia, EasyJet and Ryanair in Europe, GOL in Brazil, WestJet in Canada, and of course JetBlue and AirTran as well as Southwest here. I think that's where the real enthusiasm for investment in the industry is. There's been a lot of bottom fishing by vulture investors in terms of trying to figure out a way to make money out of the restructurings. The people who brought Continental and America West out of bankruptcy, the last cycle, in the early 90s, did very well, Mr. Bonderman and his Texas Pacific Group. But I haven't seen any very clever plays here on the equity side. People have made money in debt because when you replace $20 billion worth of United's debt with $3 billion worth of debt, the debt's pretty secure for a while. And they've charged very high interest rates. But I don't sense a lot of investor enthusiasm for the legacy airline.
As a closing question, could we see any more bankruptcies this year among the legacy carriers?
Well, the big unknown is what will be the impact of the restructuring, particularly at Northwest. If Northwest can achieve the radical cost reductions that they're talking about, then they will be a very tough competitor. And they may well force carriers like American, who are still burdened by their pension costs and so on, to follow them into bankruptcy to get rid of their pension benefits and retired employee health costs and so on.
So it sounds like it could be a very difficult year.
Another bad one. Yep.
Well, Michael, thanks for joining us.
My pleasure.
Speaking with Michael Roach of airline consultancy Roach and Sbarra, I'm August Cole with Marketwatch in San Francisco.